Hi, this is Dan from Master Trader, and I'm the Chief Option Strategist. And in this option educational video, I'm going to show how you often profit from selling options and credit spreads, even if the stock goes against you. We're going to discuss an open position of ours here in the Master Trader Advisory Letter. This is our approach to shorting options and spreads. We're earning our monthly income from time decay. And what that means is people who buy options, they buy calls because they have a bullish bias, they buy puts, and they have a bearish bias. The stock has to move as intended, or else the cost that they paid for that option decays day by day into expiration. Master Trader uses the charts to make a high probability prediction that the stock is not going to go in one direction or another, so we're willing to be the house, so to speak, like in Vegas or even insurance company, and we're going to take their money and profit from it as long as the stock holds that strike level. So in essence, we're getting paid just to predict where a stock will not go. We use chart patterns and volatility both for the reason for entering the trade and during trade management. And the reason I love options is because they're just so much easier for me to trade than stocks. If you buy or short a stock, 1 penny up or 1 penny down, you immediately have unrealized gain or loss. Whereas in this strategy I'm going to show you, all we're doing is calling a short-term turning point, and we get paid for making that prediction. We like selling high implied volatility, and what that means is volatility is based upon the SIBO, Chicago Board Option Exchange Volatility Index. When volatility is rising, fear and risk is rising, so the options become more expensive. We use the charts again, and we love selling oversold stocks on a support with a bullish turn because the premium that we get for that is much higher than it is during a period of market and stock complacency. Once we're in a trade, here's what we teach in our seminars. You do nothing. You can just let it expire worthless, or if you don't mind being assigned the stock, then you do nothing. That's fine. You can stop out, which we do. We have 85% success rate in these strategies, not 100, but anybody who claims such nonsense is lying. But even with our stops, the small losses that we take, just like an insurance company or casino having to pay out a claim every now and then, the gains cumulatively overwhelm it, making this one of our highest probability option strategies at Master Trader. You can adjust it, you can hedge it, you can roll it, obviously all beyond the scope of this brief little video. We can use this strategy in all market environments. Up, down, sideways, choppy, risky, volatile. We find these setups every single day for both in our green room, our live trading room, and or our 3 advisory letters. These are the pictures of what we call the Master Trader bullish money patterns that we're looking for to sell these put spreads around. And they come in all different flavors, and using multiple time frame analysis will also give us the additional confidence or not of whether we want to take just a sell a put spread, which is what we refer to as an income trade, or even do a directional trade. So here's the concept on selling bull put credit spreads. You find your line in the sand, the support. You're selling a put option right there. We're putting money in our pocket, and we're agreeing to buy the stock at that price if the put buyer wants us to. Then we're going to buy a further out of the money put just to limit our downside, to cap our potential losses, and it's less maintenance requirement at the brokerage firm. That difference is the net credit, and that's the maximum gain that you can get from putting on this trade if it expires worthless. But as I said in the prior page, once we're in a trade, we're in total trade management mode. And again, we're using the charts here to make our prediction of a short-term bottom. Here's a trade that we gave to the Master Trader Advisory Letter which we give all types of trades in there: stocks, options, ETFs, commodities, swing trading, long-term core trading, option layover strategies. We do everything in there. Everything starts with a pattern. This was a bullish engulfing bar after a climactic buy setup in an area of major support. And this green line is my rising 50-period moving average. And the bullish engulfing is a bullish 2-bar reversal. So we pick our line in the sand, $30 put, and we sell that put. We're going to buy a further out of the money put, $25 in this case. That's called a bull put credit spread. It expires in 21 days. That DTE is days to expiration. We took in 60 cents a share. So if you sell 10 contracts of this bull put credit spread, $600 is immediately deposited into your brokerage account. Does that mean that's immediate profit? Absolutely not. And I've seen clowns out there trying to give innocent people that impression. They say that money is yours immediately. Well, the money is yours, but they forget to tell you that you have obligations and risk while this position is open. But the return on capital, because volatility was high because of the sell-off, and this is Dropbox, DBX, and it's a new IPO, so its volatility has been high anyway, particularly after this blast off and deep retracement. These strategies, they don't take a lot of buying power, and the return on capital, ROC, is huge. 60 cents divided by the maintenance requirement is 13.6% return on capital, 21 days. Annualize that and you'll impress yourself. But here's the other part of this lesson. The stock can go 10.2% against us, and that's $3.40, from there to the $30 strike, divided by 33.40 is 10.2, and we still make our maximum profit. Now, here's the other juicy part. We're in the trade. This is an open trade. We entered over the high of this bar, the bullish green engulfing bar that we just reviewed. It retraced 1, 2, 3, 4, 5, 6 bars. We didn't do anything with this. It retraced $1.66 from our original entry. Our stop is under $30. We have a bottoming tail retest of this prior low, so it looks fine now. There's no adjustment needed. But check this out. The current midpoint to close this, which means you just load it up in your software and it will show that that's the midpoint. If you wanted to book a $250 gain, you could do that even with the stock going $1.66 against you. That is a phenomenal benefit of what we do in selling options and spreads at Master Trader. And this is occurring because of time decay. The puts that the put buyer purchased, he has 2 problems on his hands. The stock has to go down faster than the time decay. And as you can see in this lesson, it didn't. So the put buyer might be high-fiving himself saying, all right, I'm a rock star. It retraced $1.66 and he goes to the market to sell it and he's lost 25 cents a share. And that, ladies and gentlemen, is an uneducated option trader. We teach directional option trades in our full option strategy series course. But what I'm going to show you now is our specialty seminar on doing exactly this, selling these out-of-the-money put spreads. And we actually, the stock rallied this morning, and we actually closed half at 30 cents and moved, we moved stop break even already. But with the market selling off, getting overbought, we decided to put a minimum. If you're wanting to become an expert in selling these credit spreads, which we do daily, both in our two letters, the advisory letter, and we have a Master Trader weekly options trader which specializes in selling these short-term credit spreads around patterns that expire 10 days or less. And that's because the time decay rapidly expires the last few days into expiration. So we get paid just for the stock to bobble around or go up if we're selling a put spread, or as you just saw with Dropbox, it went against us and we still profited. This course, it took me over a year to put together. Again, we get paid to predict where stock is not going to go. I'm going to teach you the exact patterns to sell these credit spreads on. Easier than stocks, easier to manage, generate your weekly income. Higher probability of profit than trading stocks by definition, and the cushion to be wrong is what I refer to it as. I'm going to teach you how to manage these positions once you're in them. I have 12 comprehensive modules in this course. Specialty topics on trading volatility ETFs, trading earnings, both before and after earnings, trading gaps, trading news, particularly ones that are high volatile because they're in the news, whether it's good or bad news. Volatility spikes, based on greed and fear. The option prices become more expensive. A whole module on teaching you how to master just trading liquid ETFs, selling credit spreads around them. Some novices think, oh, it's risky selling options on expiration day. Wrong. We do it all the time, particularly with the spiders, S&P 500 ETF, SPY, because it has multiple expirations during the week, and that's one of our go-to trades. We love it. You get paid just to call a high or low for the day. Check out this course at mastertrader.com/mastering spreads, and also check out our YouTube channel if you want to continue to learn how to make money investing and trading in the markets using stocks and options. Hope that helped. Good trading, and see you next time.